And we're on. Sorry I was a little late. How's everyone going? And I see we have a few people on already. How do you give a like before I even start? That's ridiculous. Stefan, how are you? Jacob, thank you for bringing Isaiah on. Simeon, I don't know which one you are. I said you're back with a different name. And Astro GG, how are you? Okay. Guys, thanks for joining in. Hopefully you have some good questions tonight, and we'll get going. Before we get started, before you guys start hitting me with questions, we had a pretty good week. Got a couple people passing, which was great. Alexis, how are you? Andrew, you're going to nail it tomorrow. I know. I feel good about you tomorrow. We're all rooting for you. If you like what we're doing, please go into the details and click on those links. You can get a free 30-day Kindle Unlimited to get some Series 7 books without paying for them. And then when you pass, you get it done. If you want some materials, go check out the Achievable. I love them. I'm almost done with my resources video on different resources for the exams. And it's just I'm working on the script because it sounds really stupid when I read from a script, but I'm working on it. And go down Achievable. I got STC. If you guys are looking for Andrew, I'm telling you, you're going to nail it tomorrow. If you guys are looking for tutors, I got me. You can go reach out to Michael Weiss at Series 7 Exam Tutor. Brandon does some. We'll go from there. Okay. Awesome. Thank you, Simeon. I love it. Okay. Cody, 19 blank 86. Okay. Is that when you were born? Okay. Cody, you're going to nail it. Andrew, I know you're both going to have some good news for me on Tuesday. Okay. So somebody actually texted Wendy. Hey, Wendy, I haven't seen you in forever. Ooh, tomorrow's going to be 91 degrees. So let's see what we got. Somebody texted me, asked me a question, and I told them I would answer it on here. Yeah, they're not on here. No, Amana. I mean, where is everyone? Thursdays are pretty strange sometimes. Oh, Colin asked me. Okay. Yeah, maybe vacation. August could be tough. Okay. No vacation while you're studying. Okay. So, Colin, Trevor, how are you? Sorry that didn't work before. Okay. So if I have a minute, can I explain yield to call, yield to maturity when they're talking about whole or in part? Okay. Colin, good stuff. Okay. Simeon, I do every Tuesday and every Thursday at 8:30 p.m. I still keep telling them to do the pop-up one to practice the OBS, but I get busy and I don't want to do it on a regular one. I want to do it when it's off. So maybe I'll try tomorrow, and people go, when are you going to be on? And I just don't know. Okay. So Colin's asking about yield to call, yield to maturity when they're talking about a whole or in part, the higher or lower yield to call or the yield to maturity. Isaiah, come on. It's all welcome on, Isaiah. I love it. It's feel free to ask any questions. Check out my videos. What test you're taking? Yeah, Isaiah, what test are you taking that you're on here? Is it the SIE, the top off, the 63, 66? So Trevor, yes, the training consultants is fine for the 63. You just got to know everything on there. Training consultants can get you through all the exams. It's just a tough road. Usually it helps to have another vendor going along with it. Oh, Isaiah, we got this. What books are you using? Hopefully SDC, and I have a whole playlist that is just SIE the book. I go through every chapter in the book. Okay, Simeon. As I tell everyone, when you first start studying, just read the book. Just read the book the first time. Get through it one full time. That's in my top 10 video list. Not the top 10. I guess it is top 10. Why you won't pass the Series 7. I talk about that. Okay. Completely new. Okay. Oh, wow. Got it. Okay. So the SIE, you got to get the SIE. I assume the Series 7 top off, and then the 63 or 66. So Isaiah, here's my advice to you first, and I have some videos talking about this. Once you get the books, hopefully you have them, just start reading the book. Just read it straight through. And if you have STC, my videos on the playlist go match the chapters by chapter, and I actually discuss the chapters and make them a little better in English. And come on here every Tuesday and Thursday. You have questions, I'll answer them. The only ones I won't do are the deep option calculations because I sell those videos, and why would I cannibalize myself? So making Colin wait for his answer. So yield to call versus yield to maturity. Okay, so think about this. If you have a discount bond, okay? So if we have a discount bond, okay. Oh, yeah. How was the session? Was it a good session last night? Are the study sessions becoming more organized? Because some people I'm hearing good things, and it's good. Okay. Okay. And then hopefully, I know that Armana couldn't, she wanted to do a 66 one. She couldn't do it next weekend coming up because she has some plans, but we'll see. Now, back onto this. So we know what yield to call is, right? So if you have a discount bond, and again, you have a discount bond, what's going to happen is you have to always quote the worst yield. So between yield to call and yield to maturity, awesome. You have to, between yield to maturity and yield to call, you have to quote the lowest of the two. Okay. Okay. Awesome. Hey, Erica, I love that. Okay. Thank you very much. I think the option ones are awesome. I do. And they're cheap. I mean, for $10 a month, it's pretty easy. Okay. Atypical. That's awesome. I'll get to Colin. I promise I'll get to your shit. Okay. Yes, Stefan, there is. Reach out to Jacob. I don't know if there's a way to click on the names, but reach out to Jacob and he can put you in the study group. He's pretty awesome at running this stuff. Okay. Again, atypical. I am so happy for you. That's awesome. Okay. Oh, well, Wendy, I'll handle that because on the test it's not as specific. Again, atypical. I am so happy. Everyone should give snaps, whatever, for atypical. Al for passing the 7. It's not a small thing. It is a big fucking deal. What's next? A 63 or 66? Yeah, Colin, I'm making you suffer. So now I'm going back to this. So if you have a discount bond, if you buy a bond at a discount, say $800, Lisa. If you have a bond, if you buy a bond for $800 and it's 10 years to maturity, right? So in 10 years, you're going to get $1,000. Okay. Okay. In 10 years, you're going to get $1,000. So you're going to get a little bonus. You're going to get a little bonus on top of the 800. You buy it for 800, it goes to 1,000. So yield to maturity will include your current yield of your coupon plus the little bonus you're getting. But now remember, so that's over 20 years. But if you get called in like 5 years, you're getting the money even quicker. Okay. So you're getting it much faster. So what happens is yield to maturity. Say you have an 8% bond and you bought it for $600. Just say the interest rate, the current yield is like 12%, and that maybe 12. The yield to maturity will be 13, and then the yield to call will be 14 or 15 because you're making that bonus even quicker, faster than waiting for the yield to maturity. On a premium bond, you're going to quote it either yield to maturity or yield to call, and you're going to quote the lowest. So the lower of the two is yield to call, because if you buy a bond at a premium, like say $1,200, you get 1,000 at maturity. So you're making less. So you get the 1,000. So you're only going to get 1,000. So you're losing $200. Now, over 20 years, that's fine. I mean, that works out to be like, $10 a year. But if they call the bond like 5 years later, you're losing the $200 like that very, very quickly. So that's a problem. Okay. So that's where we have issues with this. So the yield to call will be lower than the yield to maturity. Now, I think you're talking about partial or in whole. You would not quote it to a partial call. You would always quote it to the in-whole call. An in-whole call is when they are calling the entire bond. So if you have a premium bond, you have to quote it to the nearest in-whole call date. All that means is the first date where they're going to buy, they could possibly buy all the bonds back. And that's what they're talking about. But the bigger thing to know is that on a discount bond, it goes coupon, current, yield to maturity, yield to call. You quote yield to maturity. On a premium bond, it's coupon, current, yield to maturity, yield to call. You quote yield to call because it's the lowest of the two. I hope that helps a little bit, Colin. Don't go too crazy on it. Okay. Okay. Now, Wendy. Okay. To be excluded from definition of agent. Okay. So for the 63, if you are an agent of a broker-dealer, you got to freaking register. It's just kind of a thing. But if you work for the issuer, there are some exemptions. And everyone tries to memorize the stupid exemptions, and the vendors try to remember you. The exam will not make you remember which 5 are. So this is what I do. If you're the agent of an issuer and you are selling either exempt securities or exempt transactions, you will not have to register. This is if you work for the issuer. So like if you work for the federal government or a muni or a bank or a common carrier, if you work for an exempt security, or if you're selling exempt transactions, if you're selling to an employees, selling to an underwriter, stuff like that, and you're not, and you're not getting a commission for it, they're not going to make you remember the little nitty gritty stuff. They're going to make you remember that if you are a agent of an issuer, not an agent of a broker dealer. So I want all of you to pretend that you have a twin sister or brother. and you work for a broker-dealer, and your twin sister or brother works for the city of New York, and you're both selling New York City muni bonds, your twin does not have to register because he works for the issuer, but you do because you work for the broker-dealer. I can't say it. That's as clear as it goes, and that's the way it's going to be. So don't overthink it. Don't try to memorize the 5, Wendy. That's what it is. And if they do ask one of the 5, I mean, really, the odds of that are pretty low. Okay. Hope that helps, Wendy. Okay. Shh. Yeah, YMCA. A lot of people do the YMCA thing. I just remember that's fine, and it's fine. I do that too. So, but I go coupon, current, yield to maturity, yield to call, coupon, current, yield to maturity, yield to call. It's like a little song. That's how I do it. Okay. 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 Jordan, I love that. That's awesome. A breeze. That's incredible. So that is incredible. Yes, it's always the lowest yield to call, yield to maturity, yield to call for premium, or yield to call for premium, or yield to mature for discount. If it's not callable, okay. If it's not callable, then it would be yield to maturity. That make sure you don't get tricked. So hold on, I'm gonna go back to this. Okay. I'm gonna go back to this. Yeah, the 66 is brutal, I have to say. Okay. Let me catch up. Okay, first of all, Andrew, don't sweat the little details. I mean, it helps if you remember. So let's think about this. You got the seesaw, you just got to know it. Just know that you got to know that that's the order. Coupon, current, yield to maturity, yield to call. So if I say you buy a 5% bond, which is a coupon, at 6%, that's a yield, has to be a discount. Because if the coupon's the lowest of the yields, it has to be a discount. If the coupon's a higher of the yields, it has to be a premium. It just has to be. Sometimes they do that to you. Don't sweat don't sweat the little shit. But just remember, statements are always quarterly. Always fucking quarterly. Balance sheets on the mutual funds are semi-annual. Disclosure docs are usually annual or something like that. It's not a hard or fast rule. But again, this is not a gotcha, what's the date for this or that test. The vendors love to do it, but the actual exam doesn't do it so much. Okay. What's the biggest on the knowledge of capital markets? I would make sure you know the products, the definitions, and their risks. Okay, you got to know the risk of. Like I have 2 videos on about risk. You have to know what's the best way to do it? You have to know all the different investment risks. Like common stock has systematic, which is market, non-systematic, which is business. If they're foreign, they also have political and currency risk, but definitely currency risk. Like if you have invested in a foreign country. Yes, both foreign countries and U.S. have political risk. That's the thing. But only foreign countries have currency risk, okay? So you have to know the risks that match up with the products, okay? And you got to know the regs, kid. You got to know the regs, FINRA rules, AML, stuff like that. Not every little rule number, but you got to know the regs. You got to understand them, okay? Okay. Again, Jordan, that is awesome. I am so happy for you. What, are you done now? Is that it? Are you done? You have no more tests? Or you have the 63 or 66 left? I can't believe you said the 7 was a breeze. I'm happy. I'm happy my videos helps you. Joe, how are you? Simeon, you're talking to him? Okay. Boom. Okay. Okay. You have questions, come in here. This is not just, I can't write all the exams. So if I do the chart, if I did the title of this, it'd be SIE, Series 6, Series 7, 63, 65, 66, 57, 79, 24 hike. It would be all those things, and it's just too hard to do. So no, here's the thing. Joe, I'm going to tell you right now, that's not actually a rule. Hey, Peter, how are you? The monthly is not, there is no FINRA rule that requires statements monthly. That's just best practices. Most broker dealers do it, but the only rule is quarterly. The only time you might have monthly is if it's a penny stock in there. But it's taught, okay? Okay, good. Joe, I'll hit that one because they have nothing to do with each other. Quibs and accredited. Okay, good. Now, yeah, Jordan, I have a couple of videos on the 66. A lot of people I have one called the Quick and Dirty. It's pretty popular. I don't know. I just ranted for 45 minutes on Series 66 stuff. Plus, if you look in my 66 playlist, I have a bunch of 63 videos. They're not 63. They're 60. They're for the regs part of the 66, and then I have the one long one for the investment pro. You know, the portfolio management, the beta, alpha, all that other crap. Okay. Okay. Awesome. Yes, that's my big thing is I like things that are consistent. Like when I do the options, you do the same thing for every option question, just about, and it's the same format. And then you don't have to remember T charts. And my feeling on T charts. I fucking think they're a lazy way of teaching. So I came up with a way I think that nobody else uses. So, okay. Now, Jordan, watch the 66 playlist, see if it helps, and then come on here and ask questions. You can ask questions on any test pretty much. The only one I don't do is the 27 because it bores the fuck out of me. Okay. And the 86, I can do that, but it's, not a lot of demand for that. Okay. Okay. So, Joe, accredited investor versus a quib. I want everyone to remember this, that they have nothing to fucking do with each other. Nothing. And accredited, remember, 1, 2, 3 accredited. Accredited, 1, 2, 3 accredited. Remember that, 1, 2, 3 accredited. 1 million net worth, minus house and car. I've never seen the actual test ask that. Or 200 grand a year single, or 300 grand a year if you're a couple. So it's one of them. You're either a million net worth, 200 grand a year salary. Perfect. 200 grand a year. Or 300 grand a year salary income, not salary income. Okay. And you have to believe that it's going to continue, not like they won the lottery one time. Okay. The million's fine. They get $1 million lottery. They're fine. Okay. That's an accredited investor. Now, a quib is never an individual. And by the way, also unaccredited is if you have the 7, the 65, or even the 82. I think they all count. And a kid said, he might have seen that on the exam on Monday. So just keep that in mind. So they expanded accredited last summer, and it's already on the new exam. Now, I'll get to the quibs. Yes, quibs are always firms, and they have at least 100 million under management. Unless it's a broker-dealer, then it's 10. What's the point of a quib? A quib is that they're so big that they can buy anything because they don't need the protections of FINRA. Yes, they do not need qualified institutional buyer. Perfect, Joe. They do not need FINRA's protection, so they let them buy anything. So let's talk about this. So if I buy a Reg D, I have to hold it fully paid for 6 months under 144 rules, and then after that, I can sell whatever I want. But what if I want? Yeah, Bobby Axelrod absolutely is a quib. Not Bobby. Axe Capital is a quib. Bobby is just a rich guy. Remember that. Bobby Axelrod is not a quib, but Axe Capital is. Okay. Now, I was going to say on this. So if I want to sell shares before the 6 months are up, I can't. Because if I buy on a Reg D, I've done all my, if I buy on a Reg D, I've done my due diligence. I looked at it, and they're going to make me hold it for 6 months fully paid because they don't want me flipping it out to grandpa, who's ignorant and doesn't know their stuff, and ripping them off. So that's why they make you hold it for 6 months, so the risky part's out. Now, this other part of this, if you want to sell it, you can sell it to a quib during that 6 months under 144A. Sasha, yeah, I love it. Okay. Yeah, well, he mentioned it. Joe served it up and I hit it. Okay. So you can sell to a quib during the 6 months because their idea is that the quib can do their own due diligence. They make their own rules and stuff like that. So not their own rules, but they don't have to be protected by other retail rules. So you can sell that to them during the 6 months. That's kind of the same reason that we have suitability rules. Well, if you're an institution, if you have an institutional customer, they can actually fill out a form and waive the suitability requirements. Not, you can't rip them off, but they say, I can do only institutions can do this. I can make my own decision, so I'm okay with them sending me stuff that may not be 100% suitable. That's kind of what institutions get sort of stuff. Okay. Okay. Peter, the 63 is just different than the SIE. I'm not saying it's easier, but it could be. If you've done all this, study for 10 hours, get 85 hours, keep taking tests because timing's a thing. So, Peter, I'm going to tell you for the 63, keep taking tests. Make sure you know, and this helps for the guys taking the 66. Remember, a broker-dealer is a firm. An agent is an individual. An IA is a firm. An IAR is an individual, okay? That will save you because a lot of times they'll say, oh, what's not an agent? And just look for the word firm or entity or individual, whatever it is. Remember, person can be either a firm or an individual. It doesn't have to be, a person doesn't have to be a living, breathing human being. Okay. Yeah. Jason, there's a lot of overlap. So I have those videos on the 63 and the 66. I have the quick and dirty 66 you can look at. If you have questions, although you're taking it Monday, so this is your last chance. But keep going at it. Make sure you get the rules and regs down. Yeah, the other stuff is there, but make sure you get down the difference between broker-dealer, IA, agent, what the admin can do, stuff like that. It's a hard test. Okay. Yep, I agree. Options, whenever you sell them, you only sell them for income. And when you buy them, the most you could lose is premium usually. Right. Got it. Okay. Okay. Yeah. So, hey, Armana, how are you? So, okay. So, were your ears ringing? I mentioned you with your 66 study group. So, guys, by the way, so anyone who wants to do a study group, reach out to Jacob. He'll send you an email. If you put your email here, I'll try to delete it right away after he says he has it. He does a study group. I think it's Mondays and Wednesdays at like 8:30. 8:30. I'm not involved in it. It's just them doing it. They do a Zoom group and they'll help each other, and he does it. Okay. Awesome. I'm glad, Simeon. I'm happy to hear that. Yeah, Joe, I get it that the practice stuff doesn't work. Also, guys, I have the membership stuff. Let me just throw it out there. So if you do the casual, it's like $10 a month to get access to the options videos. If you do the serious, I do once a week. I do a Monday Zoom call. But be warning, there's no limit. It can be 20 people on it. Sometimes it's 1, sometimes it's 5. It's never been more than 5 yet, but that doesn't mean anything. Every Monday. And for Sarah, I'm going to try to do it at 4 p.m. on Monday, 4 p.m. Eastern. And then if you do the VIP, you get that. Plus every other Tuesday, I do a guaranteed Zoom call with a maximum of 2 people. And if I have enough people, then if it's 2 tests, I split them up so you have the same test. That's all that is. Okay. Yeah, Joe, I get the whole not practice stuff, but it doesn't matter. Like whether you take 60 questions or 90, as long as you get the 72% or the 70%, you're in good shape. Okay. Simeon, again, I'm very happy that helped. Okay. So Colin, is there a difference between holding and freezing? Okay. So people don't freeze an account for 15 days. They put a hold on it. Okay. So freezing account is when you usually a freezing account. And if they use the words, I apologize if they did that. But freezing account is if you don't, oh, there you go, Joe. That's perfect. Okay. Perfect. Freezing an account is if you know what the rule is, like if you buy stock on Monday, it settles on Wednesday, but you actually have until Friday to pay for it. So you have 4 days to pay. If you don't pay for it by the 4th day, you can request an extension. And then if you don't pay by that extension or you don't request an extension, they freeze your account for 90 days. It's not even a big deal. So I was 16. I was trading options in my mom's account. I didn't pay for an option trade. Oh, Kelly, there you go. So awesome. Thank you. Welcome on. So look at that big green. Everyone gets to see that. I like that. Okay. I could maybe maybe I can, but the problem is if I go too late, Stefan, it goes into my actual teaching time because I teach like from 6 to 9, 10, 11. I'm booked. Maybe I can figure it out. Okay. Let me work on it. Kelly, welcome on. So now sounds like welcome in. Sounds like German. You'll love the option videos. Okay. And then what I'm going to do is I publish, and that's not just for the members. I publish the member thing on Monday to everyone. So that chat that I do on Monday, I send it out after a few days. So now what I do is I give it to the members for a couple of days, and then I send it to the public like a week later. I didn't do this week's because I had only one person on it. She got like a one-on-one lesson for $25. And she begged me not to put it on there because it's tough when there's only one person on there. It makes you feel a little self-conscious. Back to this. So freezing account is for 90 days. It's not a big deal. I was trading my mom's account and options, and I forgot to pay for it. And I asked for an extension. He gave it to me. But this is back in the 80s when you had phones. There's no online. And I never paid for it. He goes, well, I'm going to have to freeze your account for 90 days. I had a heart attack. He goes, relax. He said that all freezing account means is that you can do trades, but everything has to pay for up front. They won't give you the extra days to pay for it anymore. So it's fine. They dealt with it. I dealt with it 90 days. Now, a hold is if you think something's wrong. If someone's mentally incompetent, over 18 or over 65, you can put a hold on their account up to 15 days. I think they're extending it. Yeah, perfect, Joe. Okay. Perfect, Joe. I love that. Okay. Now, holding it, You can do it for 15 days if you think there's something going on. But one thing, you can't stop them from trading or paying their bills. You can stop either the entire account from withdrawing or only withdrawing to certain people. The whole point is you're trying to give yourself time to find out what the hell's going on if somebody's ripping off your customer. Do you see the difference between holding and freezing, Colin? Okay. Right. So, okay, past perfect. Okay. Jorge, make you feel better. Past perfect. You'll hear when I get my resource video out, you'll hear my thoughts on them. I think they're solid, but they go way too fucking deep. Their math questions and their math questions, their anything to do with formula or math, they go so deep, it is ridiculous. It almost makes you like focus on the wrong stuff. Okay. That's the problem. It makes you focus on the wrong stuff. And that becomes a problem. So it's what's the best way to explain it? It's almost like here's the best way to explain it. When I take the exam, okay. So what? Now the question is, Kelly, why do you think you were focusing on the math and the hard shit versus Wow, that is a deep question, Armana. Okay, so now I may have to come back to you on Tuesday. Okay, but yeah, so yeah, that's the thing. Okay, now turn my phone over. Hold on, let me make sure nobody's texting me because I'm not going to answer people who text. Okay, boom. Okay, just making sure because I have one person that texts sometimes, and I don't. Let me go back to this. So now, oh Jesus Christ, it's picking up. Okay. Let me stick with it. So Jorge, past perfect goes way too deep, even Kelly. So what happens is when you do a past perfect, anything to do with formulas, math, yields, maturity, yields to call, ignore the fucking shit. Just do the other problems, get the concepts down. Don't go because you're going to spend weeks on stupid formulas that you'll never see. They make you do yields, maturity, and yields to call, which is fucking ridiculous. It's just not the thing. Okay. Yeah, Jacob. Yeah, the counting days is fine. Just remember when you're doing accrued interest, count up to but not including the settlement date. And again, the vendors make it way harder. I'm not even sure they even ask to do the accrued interest anymore in the test. They want to know when you count to. So yeah, because here's the thing. They're not trying to screw you up math-wise. They want to make sure you understand the concept. They're not trying to give you some crazy algebra question that you have to figure out. Yet all the vendors love to do that. If you do this and this, what is that? That's algebra. So it's not testing your knowledge. It's testing whether you can remember A over C equals B minus D. They're not doing that. So, don't sweat the counting too much, but it's not that big a deal. It's there, but it's not that big a deal. Okay. But just remember, munis and corporates are 30-day months. Treasuries are actual day. You just got to use a knuckle trick to figure it out. January. If you need help, I can work on that. Okay. So now, Armana. Sorry, I'm late. So can you explain fiduciary responsibility for revocable? Okay. So this is the one I'm going to tell you about. This is what you have to know about revocable versus irrevocable. Revocable means that it's still part of the grantor's estate, which means a grantor can change the information anytime they want. They can change the rules. They can pull it back. They can do whatever. But again, the problem is it's part of their estate. So if they die, it's part of their estate. Irrevocable means once you put the money in, the grantor has no control. And the only way they can change it is if the beneficiary says okay. So I would think the fiduciary responsibility is more on the trustee than the grantor. But because irrevocable, it's still theirs. Okay. Here's a couple of things what you need to know. The trustee, can they delegate investment management stuff? Yes. Can they hire a lawyer, accountant? They can do all that stuff if it's in the best interest of the beneficiaries and the trust. Can they delegate actually paying out the investors? No. Okay. The beneficiaries, they cannot. That has to be done by them. Another thing, simple trust, all the money it earns, not the principal or the corpus, they call it, all the money a trust earns, if it's a simple trust, must be distributed every year. A complex trust can be done, you can hold it and say, listen, we're putting money in, it won't pay out to the kid's 25 or 28 or has a job. You can put more rules on it. But again, simple, every year it has to distribute all the earnings. Complex, you can hold it. Trustee can delegate stuff, but he or she also has to manage the trustee for all the beneficiaries, not the oldest, not the youngest, not their children, not their wives, just the beneficiaries according to the trust rules. That is absolutely going to be a question. Okay. Okay. Hold on. Okay. Simeon, I'll get to yours. I love Kaplan, but I think, again, Colin nails it. Caleb, how are you? You're done, and you're still coming on here. Caleb is the man. Got the SIE 7 and the 66. He's just coming on here so I can send him a free hat. Okay. Okay. Joe, I'll get this. So 529s versus 529 prepaid. You're just paying up front. You're basically, a lot of times what you're doing is you're doing a prepaid. You're paying the tuition based on what the tuition is now and locking it in. But there are issues if your kid doesn't go to that school and stuff. But the big thing between a 529 and a Coverdell, that's what where the questions are going to be. Okay. Okay. 529 is run by the state. Has no income limit. Well, there's state limits, but there are state income limits. There are none. Contribution limits are very high. There's no age limits, but it's only really supposed to be for college and after. You can use a little bit for school. Now, Coverdell ESA, income limits. The max you can put it is $2,000 per person. At 18, it becomes the kids. They must use it by the time they're 30. See a lot of stupid rules. Why? Because it's run by the federal government and they make stupid rules. The only difference is on that one is you can invest in almost anything you want that's prudent. On the Coverdell and the 529, they have a list of, like, each state has a list of what you can invest in. The good thing about both of them is the 529 and the Coverdell, the money goes in after tax and it grows tax deferred. And if you use it for education, you pay no taxes on the growth. That's the shit you need to know. Okay. How much different is the Series 7 versus for 6 from the okay. So the 7 covers. Oh, you asked in December of the 6. I'm going to talk about the 7. The 6 is almost easier than the SIE. That's just mutual funds, annuities, customer accounts, communications, and taxes. If you know that shit, you're going to be fine. The 7 is, think of the SIE here and think the 7 here. The SIE is more definitional and risks. The 7 is actually situational, where you're using that information. Yes, there's more math, there's more calculation, but that's not the worst part. It's the suitability. That's where people get hurt. The younger people get hurt because they don't experience this stuff. So they're just like, my biggest thing I always joke is say, what would you give a 50-year-old who wants some safety or wants to be conservative? All my 22-year-olds say treasuries. Fuck you. 50-year-old is not that old. Yes, I'm over 50, so I'm saying that. But you probably have 20, 30 years of investing, so treasuries aren't good. So I have 30 and up doing that. They get the suitability. 30 and under, they have to kind of read it and kind of learn it. It's kind of the way it goes. So the 7 is all about suitability, and it's a much deeper dive than the SIE. When you take the 7, you'll realize how easy the SIE is. But the SIE has a tough time because you're just learning the stuff, right? So the 7 is hard, but if you learn the SIE instead of just memorizing and then try to actually use the stuff to learn, then the 7 becomes much easier. Like the kid Jacob before said, it was a breeze. Okay. Yeah, Kelly, 3 weeks is not a lot of time. That sounds like an A.J. Edwards, maybe? Not A.J. Edwards. Edward Jones sounds like they give you 2.5 weeks, 3 weeks to study for the SIE, then the 7, and then the 66. It is what it is. I mean, if you have all day to study, you can do it. So my suggestion to you, if you have time, read the book. Get through the book one time. I know it's past perfect. Really, seriously, if you want to get through quicker, go in the link. Yeah, I sound like a salesperson. Buy the Achievable thing. It's like $100 and something, very low, and it covers everything. It's a whole book. It's solid stuff. Okay, now. Simeon, what are my thoughts on Kaplan? I don't love them. I think they cover this stuff and they have a lot of questions. Look, my whole resources video, I have a whole thing on them, but I'm going to explain it. Kaplan has a lot of questions. Kaplan you can customize, but they go too deep in the nitty-gritty. And yes, you'll get a question. Jorge, no problem. You'll get questions like you just said. You'll get a question on a topic that you'll have to look in the book, and it's one random sentence in the middle of a whole chapter. So it's really hard to do it. I think they go to nitty-gritty. I like Achievable. I like STC. Look, if you have Achievable, STC, Kaplan, Notman, Pass Perfect, training, you're going to pass. Training consultants, you need some help. Okay? Okay. No, Lancey, you will not have to learn the formula for well, there you go, Joe. You will not have to know how to do future value, present value, You just kind of have to know, you have to kind of recognize the formula and know what it's for. Okay. Simeon, it could be cleaner. I think they jump around a little bit, but their biggest thing is they have a lot of questions. But as I talked to the guy at Achievable, they said they have more. Okay. So Jorge, here's my answer for you. Okay. Joe, look at you. You're nailing this stuff. Okay. Revocable, you can make changes. Irrevocable, you cannot change. Colin, you're right. It's reverse. Irrevocable means you cannot change it because you cannot take it back. It's not revocable. Revocable, you can make changes. Okay. Revocable, you can make changes. Irrevocable, you can't. So Jorge, the answer to your question is, are there 10 to 15 option questions versus 30 to 35? Yes. Some people will get 10, some people get 20, some people get 25 or 30. I think 35 would be very much on the high end. Like, I don't think they have more than 20, but they could. I mean, you can just get a bad pull and you get 35. Although, in reality, if you do it right, if you get 35 option questions, you should be happy as hell because the option questions are not the hardest part of the test. Are they the harder part of the test for Kaplan, STC, Pass Perfect? Yes. So I always tell everyone, if you learn the options, you get the basics and you get the good stuff down, on Pass Perfect, STC, Notman, and Kaplan, the options will pull your scores down and margin. On the real exam, they'll pull your score up because they're so much more straightforward. And I do not get why the vendors do such complicated option questions. I don't. I really don't. Okay. So, reading the book sucks. I agree. I don't think anybody's questions are tough, are close to the 66. None of them are. To be fair, the 66 might be better. This is what one of my students says. The 66 book is better, explains the regs and rules better. Kaplan. STC does the portfolio management stuff better. I think my videos help, but you got to do some of the reading. You got to understand. Half the test is going to be the rules and regs. You got to know that. Because if you're not strong on that, and not every little nuance, but if you're not strong on it, you're going to have a tough day when you go take it. Okay. So again, Lacey, I'm going to say that again, that you will not have to know the formula. Wait, Joe, do you use Securities Institute or Securities Training Corp? Okay. Oh, yeah. So Joe, 7 versus 6, right? So the 7 covers every security, options, CMOs, bonds, stocks, preferred stocks, foreign stocks, all that crap. And variable annuities, mutual funds. 6 is really just mutual funds, annuities, communications, customer accounts, and taxes. Okay. So it's not a lot of products. And fixed annuities is a security? No, it's not a security. Okay. So the SIE is basic on it. In reality, okay. Interesting. So the SIE is like basic, more definitional, So Simeon, I took my 6 and 63 about a year before they rolled out the SIE, right? So I'm only about to wrap up the 7 top off. So here's what'll help you, okay? And it sounds like I'm doing it, okay? I think the best thing you can do, and to help you get you started for this, is watch my SIE, the book thing. I know it's a while, it's 20 chapters, but just listen to them and just see if there's anything on there you don't know, because that's the whole SIE book. That'll teach you everything you need to know to help you, and that'll give you a nice kickstart toward the 7 top off. Simeon, okay? So I would say just spend a couple hours watching my videos, if you can stand my voice for that long, and just watch them through, and anything you're afraid of missing from the SIE, you'll do. Because yes, I had Ruben, who sometimes is on here. He did the same route. He had the 663 before the SIE. I helped him out years ago. And then he's taking the 7, and he's fine. He passed it. But he was struggling because all the SIE stuff that they assumed he knew wasn't on the 6. So he had to relearn it, which he did. He nailed it. So, yeah, Simeon, I would say watch my videos on the SIE, the book, just to get through them. It's 20 chapters, right? I mean, I'm not saying it's nothing, but then they're not super long, and then they should help you. Okay. Yeah. So I'm telling you, training consultants to get past 663 SIE, probably what I think for the 7, you need some help. Look, and her video, Tina's videos are awesome, right? If you slow it down a little bit because she talks slow. Look, me saying somebody has an annoying voice is a stretch, right? Because of my voice. But if you slow it down, if you slow down Tina's videos, slow it down, speed it up. Do it at 1.25, and it's all of a sudden, instead of her speaking like this, it sounds like this. It sounds normal. And then mine, everyone says to slow mine down to like 75%. Okay. 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 100%, Andy. The option questions on the 7 are more complicated. I'm not saying that they're always harder. They're just, the ones on the 7 are absolutely straightforward, but you need to know your shit. If you're just memorizing buzzwords, you might have a problem. Yeah, Joe, so Securities Institute of America, I think they're okay. I know the guy who writes it. He knows his stuff, and the questions are good, but you probably need a supplement. I actually think if you use somebody else's books and use their questions, you'll be good, okay? Yeah, Georgiana, I'll work on that. So if you Security, okay, so if you do the SIA, Securities Institute of America, their questions are hard enough that they kind of they challenge you. So I like them for that. I almost tell people just to buy their question bank. It doesn't hurt. Okay. Bonds in the most issue recently, interest bearing versus not. Okay, so in reality, all bonds have interest, pay interest, right? Or that'd be why would you buy them? But zero coupons don't pay interest during the life of it, right? So remember, don't memorize all the rules and regs. Just get the concepts, get the big pictures. If you're taking the SIE, why don't you try to take that SIE exam that FINRA does on their website? And I actually have a video of me doing it to see how you do. Okay. Now, well, yeah, true. Tina's okay. I know she talks slower. She talks slower than me. Okay. Right. Yes, my mom watches these sometimes, and that's the painful part. She said, you talk too fast. I'm like, I can't help it. I tell people to slow it down. Okay. What's working capital? A question. Okay. I do. I think trading does. I have a lot of people that trade, and it helps them learn some of it. Okay. Because the best way to learn is to lose money. Okay. Back to this. Working capital. Working capital is kind of how much cash or how much assets that the firm has that's coming due pretty quickly that they'll have. So working capital is just kind of what we have now. It's not the same as net worth. Net worth is all my assets minus all my liabilities, including long-term stuff and short-term stuff, the same. Working capital is current assets minus current liabilities. So it's what we have now. So it's all the current assets or all the cash or assets we have now plus what we're going to get within a year. Current liabilities are things we owe now or within the next year. So basically, if you do current assets minus current liabilities, that gives you working capital. It gives you an idea of what the company has on hand, not so much cash, but like liquid assets. That's kind of what working capital is about. Okay. There you go. It's just true. Okay. Okay. There we go. Because Sarab, I think that Sarab 420, either your April 20th or your don't toke up while you're doing it. Okay. So now, unless it relaxes you. So if you take it on the 17th, you got 12 days. Okay. Get through the video, get through all the stuff. Make sure you know the risks. Get the FINRA rules down, get the customer accounts down, get the investment risk, like interest rate risk, reinvestment risk, all that stuff. If you have STC, it's chapter 20. I don't know how it is on the other books, but make sure you know all the risks cold and make sure you know the risks and make sure you know the definitions, the type, what each security is, what they kind of do, what they don't. You don't need suitability as much. Now, somebody said they saw a tax equivalent yield question. I have a video on that. Somebody saw a reference to earnings per share. What is earnings per share? Total earnings of the company divided by the outstanding shares. What's PE ratio? The market price of the stock divided by that earnings per share. It's so easy because it's written into it's like earnings per share, EPS, earnings per share. It's earnings divided by the shares. PE ratio, price to earnings, market price divided by the earnings. Those, they won't show up. They might reference it. So Sarab, also make sure you know how to do a stock split. Make sure you know how to do maybe an NAV calculation and know that it's always divided by the POP, not the NAV. And make sure you know how to do some option customer break even, max gain, max loss stuff, and current yield, if I didn't say that already. Okay. Okay. That's funny. Okay. Wow. Okay. So Kevin, life hacks and health SIE. So you've got all the hard ones out of the way, and now you're taking the 7. Okay. So the straddles and spreads, don't sweat them too much. I mean, I have the videos. You can watch, join the membership and do it if you want. And I think they're fucking gold. But there's other things on YouTube where you can get some options. If I don't like the way they do them, they're too tricky. They work on tricks and stuff. But it's fine. I mean, the spreads and straddles won't kill you. Straddles won't. So remember, here's the thing. So here's a couple of things. Remember, a straddle is either long or short. If it's a long straddle, it's buy a call, buy a put. And you want volatility, max gain is unlimited, max loss is the premium. Always remember, with straddle, there's 2 break-evens. 2 break-evens. See, my broken nail, it's about to fall off. I slammed it in the door, about a month ago, and the nail it's been taking a while. It's going to come off soon. It's really popping. Hope it doesn't happen during the class. So now, long straddle volatility, short straddle stability, because you're selling both options. The way you know a straddle is you buy a call, buy a put, or sell a call, sell a put. How do you know what a spread is? It's buy a call, sell a call. See that? Straddles have different options. Spreads have the same options, but you buy and sell them. Spreads have only 1 break even. Straddles have multiple. 2. Straddles are not bullish or bearish. They're either volatile or stable. And the max gain, max loss is either unlimited or premium. Those are the only 2 choices. Long straddle, unlimited gain, premium loss. Short straddle, I want volatility. I want stability. So the most I can make is the premium if they both expire, and the most I can lose is unlimited. Spreads have 1 break even. And I'll give you 1 hint. Find out the net premium. Always remember, if they're the same, you add. If you're different, you subtract. So on straddles, since it's 2 buys or 2 sells, you add the premiums. On spreads, since it's a buy and a sell, you subtract. If you want more, go on to buy the videos. Okay. Yeah, our questions are hard, especially options. Okay. Yeah, it's a lot of definitions. Good. Okay, I hope that helps. Okay. Yep. Okay. If it gets fully liquidated, you mean when you sell it, the owner does. Okay. So if you sell it, so if you have an annuity and you sell it before you annuitize, the person who owns it gets the money. But after, okay, that's true, Kevin. It's sometimes, remember, okay, I'm going to get back to you. Let me finish Alessis. I'll hit Kevin's, okay? So if it's after annuitize, it doesn't, there's no, unless they mean liquidated, I mean it's done, but that's kind of weird. After you annuitize, it's depending on what you pick. If you choose straight life, then once you die, it's done. Nobody can touch it. If you do straight life with period certain, then if you die before the period certain is up, your beneficiary gets the money. If it's joint and last survivor, it keeps paying until both die. Or if it's a unit refund annuity, if you die before all the money's paid out, it goes to the beneficiary. So if you die after you annuitize and it's set up to pay someone, it'll be the beneficiary. If it's Simeon, thank you for joining in. See you on Tuesday, hopefully. So, and Isaiah, hope you're learning some stuff here. See, I remember sometimes. And that was by doing that. So if you pull the money out of the annuity before you annuitize, the owner gets it. But if the owner dies, then the beneficiaries get it. And they do not step up the cost basis. Remember that. So if you put in 20 grand and it grows to 100 and you get it, even if you die, they're going to get it at 20, which means they owe taxes from anything above 20. Okay. Yeah, Kevin, I agree. The questions are hard. Okay. So the questions are harder. On the option, questions are more complicated and more difficult and more, as I say, the vendors, like especially Kaplan, loves to hide the ball. Like they say, you bought this and sold this, and then you covered it intrinsic. So if you don't know how to get intrinsic, you can't answer the question. The exam I took, it said you sold at 5, you bought at 7, but it hid it between other things, but it told you what you bought and sold at. So I would say that if you're pretty good with the basics of options and it's the written questions that are getting you, you're probably in a good place. Again, I am no way, shape, or form saying that these exams are easy, but the answer's there and they're not hiding the ball. Okay. Okay, Jacob. So if you lose, Joe, we got it. Okay, so here's the thing. So I'm going to fix that a little bit, okay? If you lose money, so say you make 50 grand and you lose 60. you have a $10,000 net loss. That means you can use all of it against your, so you now have 10 grand. So you used all of it to offset your capital gain, and then you'll have 10 grand. You can use 3 grand against your ordinary income and then carry forward to the next year. So if you actually did lose 10 grand, you could use 3 grand this year, 3 grand next year, 3 grand the year after that, and then 1 grand after that. Once it's gone, it's gone. But even if next year you have capital gains, you can use all of it against your capital gains. Okay. Okay. It's funny. Okay. You can carry over it much. So here's my example, Jacob. So I have, creative accounting, right? So here's my deal, Jacob. So when I was running a firm, the compliance officer, a guy came in and he goes, I need to trade. And we're like, we don't really let you trade that much. Okay. Yeah. The IRS gets their money, whatever. So here's the thing. So he goes, I need to trade in my personal account. I go, why? I said, we let you do it a little bit, but not that much. He goes, I need to do it a lot. And so I ended up letting him because this is what happened. He lost $1 million in 2009 or 2008. Okay. Lost $1 million. How he could still be working here, I don't know. But he goes, I can't just use 3 grand a year. It'll take me 300 years to offset. So if I trade I can make up to $1 million and not have to pay any taxes. The first $1 million I make doesn't have to, I don't pay taxes on. So you can carry over whatever's left over. So if you have $1 million loss, you use 3 grand against your ordinary income, and then you use 997,000. You can pay forward. Okay, guys, that is awesome. We got almost a whole hour in there. Sorry for starting a little late. Thank you for joining in. Please go if you want some free books. I think you can go on Kindle Unlimited. I have a link down there. You get 30 days of free reading, and not a lot. Some Series 7 books are on there. If you like the achievable stuff, like the guys on Past Perfect, like if you're struggling, go on there. And I think it was Kelly who said it was bad. Okay. Oh, boom! You got it. You set that a limited partnership up in Delaware. I get it. My LLC is in New York, I think. Okay. Awesome. Guys, hit the links if you want to do it. Throw my 2-3 cents my way. If you like SCC, go down there, get a discount. I'm going to put, if you guys are looking for tutors and you can't afford me, everyone, good night. Michael Weiss and Brandon Rith are solid tutors. And we'll go from there. Everyone, good night. And I'll see you on Tuesday at 8:30 p.m. Eastern every Tuesday and Thursday. The only time it won't happen is if my daughter gives birth on one of those days. I will try to send out a notification, but I'm not really going to care that much. Anyone, guys, you all have a good night. And for the guys with the membership, I'll see you Monday at like 3 or 4 o'clock. I'll try to do it as late as possible. Everyone, good night. Thank you. Robert Morris, how are you? Everyone, good night. Good night. I can't leave. Why am I leaving? Everyone gets to stare at me for another 2 seconds.